Good morning, also from my side and on behalf of the German team. I'm happy to be here to tell you this story. I think the team is excited, I'm excited, and I hope you will be excited in the end of the day as well. Of course, the votes are with you. You have had the framework of the presentation yesterday and from Claudia. Let me start with a summary up front. We will promise you a high-speed network quality, which is a key differentiator in the market. It really stands away from competition. We will massively invest in LTE, in fiber, and in vectoring. That's what you heard yesterday from René as well. He gave away some very interesting clues, I think, of this story. I'll go in depth and tell you how we are going to use this differentiator which we have in the network, because just building the network is not enough. The network is building is a cost-intensive part of our business, and once the network is there, of course, the challenge is how to monetize what we have invested in the network. The final promise we make you is we stabilize revenue in 2014, and those are the four key elements of this presentation. I think before you buy my story, in the end of the day, it's always good to look back. I've learned that history is a good predictor of what happens in the past, in the future, and sorry, after 3 years, I sometimes have to move from Dutch into English. Some patience for that. But let me look at the history. And history we have summarized as saying we have led a solid basis in a very competitive market. It's not an easy market. I think you're as much aware of that as I am and the team is. On market, a mixed picture. To be very honest, on fixed, we promised you to maintain the market share. We are still at a very strong market share, almost 45%. And please keep in mind, different from what we do in mobile, we measure here customers. So it's a customer market share of 45%. It's less than we promised you, and it has very much to do with a very strong value play. We have focused not on revenue, but of the value of those customers. It has been a play of retention and not so much of a net add market share. On mobile, mixed. We clearly overpromised on mobile data, more than 20% over the 1.5 billion we promised you for 2015. That's of course the future of our business, but, and that has much to do with the loss of exclusivity of iPhone, we lost on our revenue. I'll go into more details later on that one. On entertain, we missed our target. In 2010, we told you we would end up between 2.5 and 3 million. We will end the year by 1.9. If we have strong Christmas sales, I'm still positive we get close to 2 million. Also, that is very much a value story. We set as a clear target to have a 30% data ARPU delta versus our double play product. That's not what we thought in the beginning. We thought we go for massive numbers in entertain, and you said it's a very costly program. Once you have customers on, it's very good, but we are very strongly focused on driving value in this segment, and there I'm happy with the revenue on EBITDA, but the customer numbers are honestly somewhat under what we promised you. If we look at the second block, customer, and there's only a small block on this chart, but it's a very important block, we over-delivered. For those of you who are not familiar with our customer loyalty index, we use TRIM, and it's a total package of what we do in the network, what we do on product, what we do on customer service, on delivery, but also on price. And it goes in kind of a black box, and it gives you a value. We improved by 5 points. We went from 51 to 56. And you have to believe me at this moment, an increase of 3 points is a significant increase. So we made a significant increase. And when I tell you that also price is part of this indicator, you can imagine we scored very well on network, customer service, and products, and we are always being challenged on price, because price in mobile and on fixed has a premium from between 10 to 20% for Deutsche Telekom. If I look at the financials, also there a mixed picture. Honestly, we didn't deliver on revenue. We missed by 2.2%, and we had in 2010 clearly said we're going to make it. What happened? Also there, a key driver, a very strong focus on value, much more value EBITDA, what do we deliver in the end, what cost do we take into account, and not so much the absolute customer numbers we have been pushing. Revenue is very much associated then to customer numbers. We said revenue is less. If we just show you handset revenue, it's very nice, but you know as well, handset revenue in the end of the money, end of the day doesn't bring the money. Stronger price competition in mobile than we had expected in 2010, and also highest regulation are the key elements why we couldn't deliver on revenue. On OPEX, very strong delivery. We overachieved our target by 30%, and I can tell you, it's in our blood, it's part of our DNA. We did a very we are a very cost-discipline driven company. We have still a very strong Save for Service program, and behind that we had savings of 1.9 billion euro over the last 3 years. Very much driven by process improvements in everything we do, especially in customer service and on the fixed line part of our business. We significantly lowered complaints. We invested a lot of money in automation of services. And for example, we are now able to manage a lot of our devices on a remote basis, saving costs of our technicians having to drive to our customers. Also massive savings, 350 million on IT. We took out a lot of legacy IT systems, and we did a lot on standardization of IT. In the end, that translated into, and I can say I'm proud on that, a 4% point improvement of EBITDA margin. As said, overall, I think a solid performance with some green, some red, and some yellow lights. And let me go into some more details of the reasons behind this. In broadband, by far still the largest broadband player in Germany with a 45% market share, as said, as a customer market share, so it's not revenue. The number 2 in the market, United, with only 8%. Of course, those guys are growing. Especially over the last 2 years, we have seen massive growth in cable. They have become a really strong and challenging competitor. Nevertheless, over the past 3 years, we have been able to win more than 1 million net adds to our broadband basis. If you consider that gain of 1 million customers at an almost 20%, 25% price premium, you can imagine how much money that brought. I think the price premium alone over the past 3 years accounts for more than 1 billion euro, which we won out of that market. Not falling into the trap of playing the price game, reducing prices to massively get new customers that in the end of the day don't bring anything to your business. Another factor that played into the fixed line is a strong reduction of losses in the fixed line. In the top year, 2005, we lost 2.5 million fixed lines. In 2009, we ended the year with almost 2 million. We estimate 2012 to have a loss of only 1 million line losses. Last year was still 1.25. So you see, we're still losing, but the trend is significantly improving. If you look at that on a European basis, I think we stand out clearly as well. Of course, BT, behind the massive investments they could do in the fiber rollout, did better than we. But if you compare to the other big players, I'm proud of what we did in the broadband market. In mobile, as said, a bit more mixed picture. We did grow our revenue since 2009, but we lost market share to competition. Key reason for that is loss of the iPhone exclusivity, the end of 2010. And what happened then is that our competitors got into kind of an iPhone catch-up, so they won back new customers. We introduced a new price plan to keep as many of those very valuable iPhone customers out of 2008 on our network. And that price plan was very successful in the sense that it massively reduced churn, but it also costed a lot of money because, of course, in the end of the day, we had to reduce our tariffs. With that value focus we had in that period, and very much on value as postpaid, but value also as iPhone, we lost some focus on prepaid. We lost in the prepaid market, and we had to stop cooperation with one of our important service providers due to a governance issue, and that, of course, has an effect on the revenue as well. The good thing is, if we look at our mobile business, it's not on the chart, but if you look at 2012, we are the only operator in the German market that reversed the growth trend in 2012. Since the first quarter, in which we're still minus 1.8% versus last year in that quarter, we improved the trend to -1 in the second quarter and -0.5% in the third quarter. And while all the others saw a decline in the growth trend. And for those of you who have followed the market trends, carefully got back our market leadership in Q3. Q3 traditionally a very strong quarter for us, but I think much more important is the underlying structural development that we are back on track to regain market leadership. A program started already last year, strongly focusing on the private segment, but also on the business segment. If you take that performance, again, also in a European perspective, from my point of view, we clearly outperformed the market. This is a 3-year perspective. You see only Deutsche Telekom did slightly better. But if you would take it on a more short-term perspective, with the introduction of Iliad Free in France, the trend for Deutsche Telekom is negative, of course, at the moment. Another thing we did over the past years is very much focus on the One Company program. René told you yesterday already, a massive operation to get almost 70,000 employees integrated with a very traditional and much more legacy systems in fixed line network, with a modern organization, with modern IT systems and a different mentality, of course, from mobile. I think we've done very successfully. We started, of course, with one brand, one sales and service organization, of which you will see the benefits during the presentation several times. The organizations are now fully put together. We have already integrated a lot of processes and steering, which are very important to benefit from the integration and from cross and upselling. Many good examples of cooperation and synergies in fixed line and mobile network rollout. Just to mention the fiber rollout, which we can use for the fixed line network, but which is also a big asset to the mobile network. And finally, integrated IT systems and processes where we are on the way and who are enable us to, in the end of the day, bring even more. On the left side, you see what it brought in euros. I think in the end of the day, it's about what did it really bring. More than 950 million additional revenue from cross and upselling in the past 3 years. And for 2012, to give you an idea of where we are running, we estimate to have even more than 400 million euro of additional revenue behind this program. On the right-hand side, it's also a cost-saving program, the accumulated OPEX reduction of about 250 million in 3 years. And One Company is on its way, has also led to a very strong inward focus. I have to be very honest on that one. The team has recognized in 2011, of course, all the focus on this important program. Since then, we have become much more externally focused, very strong focus on customer, on what's happening in the market. And I think the fruits of that you will find back in this plan and in the promise we make for the years to come. There are more indicators of the success of what we have done in the past years. We massively invested in process improvement, in customer service improvement. You see 2 examples on the chart. There are many more. The meantime between assistants, that's when the technical guys run out to fix something on a fixed line access, decreased from 6.7 years to 10.2 years. So now only every 10 years we have to go and assist on a DSL line, whereas before it was in 6.7 years, an improvement of 50%. Reduction of customer complaints by almost 60%. You can imagine that is a major cost saving, first of all. I think that's what you will be interested in as financial guys, and you should be interested in. We are interested in that as well. But it's also a massive driver of customer satisfaction. The less we have to assist customers, the less they have to contact us, the more customer satisfaction we get. And I told you our trim value is now at 56. A significant improvement over the last 3 years. If we look at the last year, we see a further improvement, 3 points in mobile, 2 points in fixed. And we see, and I think that's so important as well, we go up. Competition, both in mobile and in fixed, goes down by 7 points. So we are on the right way, and customer is clearly benefiting from that, and we as well. Why are we benefiting? More customer satisfaction gives reduced churn. Over 3 years, we've reduced our churn in mobile by 30% and in the fixed line business by 24%. And that improvement in churn is also very strongly driven by the One Company program. That's the integrated approach you see on the right side. And to explain what's happening there, if you look in the middle, where we see the churn of fixed line contracts, customers that only have a fixed line contract from us have a churn of 6.8% per year. Those who also have a mobile contract have a churn of only 4.9. And same logic applies to customers where we see the churn on the mobile on the right side of the chart. So all those quality measures, process improvement, cost reduction, customer satisfaction improvement. Bottom line, that translates, as I said, into a 4% points increase in EBITDA margin. I think a very solid financial performance. If you compare that on the right hand side first with our German colleagues, you see that we do a significantly better job. If you dare to say, if you compare to Vodafone, Telefonica, and A+ in Germany, very strong mobile, but very focused on mobile, with a relatively asset-light structure, of course. I think that is an excellent performance. And if you compare us to the European peers, there is still some room for improvement. Also there, please look at the trend. We go up, and the others basically go down. So I think we are on the right way. We outperform in profitability terms, and that over a period of more than 3 years. Good. Now let me elaborate on some important market trends. And some of them you heard yesterday already from René. But as they are building blocks for what we are going to do, I would like to repeat them briefly. We strongly believe in mobile data growth. We think this is a tremendous opportunity for the market. We've seen an enormous increase in the market, so not specifically with us, in smartphones and in tablets. You see the numbers, I think they're really amazing on the left side of this chart. And the good thing is that people who are buying those devices are actually going to use them. And we see the usage going up very fast. The iPhone 4S was only introduced 12, 14 months ago. And from iPhone 4S to iPhone 5 shows an increase of almost 60% in data usage. We expect that by 2015, 65% of all active mobile users will be using data. And that will result in an increase of data revenues from today to 2050 by almost 50%. And in the year 2015, 40% of our revenue will be in mobile data. At the same point of time, I say, please, as of now, let us look at the total revenue, because it becomes more and more difficult for us as operators to distinguish between traditional voice, SMS business, and data. So I think the key KPI in the market should, in the end of the day, be to look at total revenue and step away a little bit from traditional business and the future, which is mobile data, of course. In fixed line, we see 3 very important user cases, customer use cases that drive, from our point of view, the need for high speed and also for capacity. And we think that is very important. It was highlighted yesterday as well. We foresee a massive increase in interest for upload speed and upload capacity. First on video, it's non-linear TV, it's IPTV. You saw some examples yesterday by Thomas Kiesling in our T gallery. HD is already massively driving. 3D will be the next step in TV. On cloud services, that is the big booster for upload, of course. It's not just our files which we put in today, it's not just our photos, but it will also be many more videos, for example, it will be music. We are maybe not the heavy users, but if you see the youth of today, everything is in the cloud. I spoke to someone yesterday who said, yeah, I lost my data, I lost my contacts because I lost my phone. That will not happen to the younger generation. They have the data in the cloud. On browsing, also a growing demand, more complex websites, e-commerce, virtual reality are some of the drivers of browsing, but also parallel usage. I mean, it's very normal now that a household doesn't have one computer anymore, but with tablets, and with more PCs and laptops, we really see an increase in parallel usage in households. Our modeling shows an increase of roughly 370% additional volume in the market over the coming years. And that is about the volume that's also predicted by many of the outside research agencies. In browsing, almost doubling, tripling, sorry, an increase of 180%, in cloud 280%, and in video even more than 500% increase over that period. If we take a bit more closer look at the German market, I've taken out 3 important developments in fixed and 3 in mobile, which I would elaborate on. On cable, growing competition. Let's be honest, those guys are doing a very strong job. They gained 1.8 million new customers over the past 3 years, but we won 1 million new customers there as well. So we're doing not that bad. There's heavy price competition on the broadband product, and what we are forgetting if we're looking at cable, I think, is that they are massively losing on TV. We lost over the past 3 years, we won over the past 3 years 1.8 million customers on entertain. Cable in total lost 1.5 million TV customers. And we're simply forgetting that. That's money laying there for those guys, and that money is getting away from them. We see increasing TV competition, we see also other players entering the market, and you can imagine that is what we have to have an answer to. On fixed mobile substitution, a relatively stable development in Germany, still at low levels, not comparing to anything else that's happening in Europe. In 2012, so far, we lost 224,000 fixed lines in total in the market. It was about 100,000 in 2011 and a little bit higher, 151,000 in 2010. So at a very stable and I would say relatively low level. Nevertheless, important. Maybe the question why so relatively stable in Germany. I think Germans look for certainty. They don't want to take any risk. And of course, with mobile, you have more risk than with a fixed line connection. So that helps us at the moment. What doesn't help us is that our wholesale partners are losing market share at the moment. In Q3 this year, for the first time, the unbundlers had a net development in numbers of customers, but they have been losing market share over the years, of course. We see there a strong demand for technology improvement. We see a demand for new business models. And of course, some might think it's interesting when they lose market share, it's good for telecom. They are on our networks as well. They help us to benefit from the infrastructure we have built. They invest in market development as well. So it's in our interest to also keep our wholesale partners in the market. On mobile, very strong price competition with a lot of discount brands. If you compare price levels of 2009 with April 2012, when your phone came to the market, you see a decrease on a voice full flat of 67%. And can you imagine people are still discussing that mobile telephony is expensive, especially in Brussels. I think there's no market that has shown a 67% price decrease over 3 years. We can say voice and SMS have really become commodity. We never wanted to believe it, but I think it's there. Second development we see is full flats. Full flats are all over the place. The all-net voice is becoming standard. It becomes more and more difficult for us to sell price plans that don't have full flats. One good development for us is that network quality is becoming more and more of a differentiator. Has, of course, everything to do with data usage. People got used to having some coverage problems on voice, but on data, if the speed isn't there, if the capacity isn't there, if you're standing there next to your colleagues and you can't show the video you wanted to show, it's immediately visible. And especially A+ and O2 are heavily suffering from this. Other important effects in the market as well, regulation. René spoke about it yesterday as well. A mobile termination rate cut of 80% over the past, since 2007, accounting only in the last 2 years for the German market of a total of €1 billion. Reduction as well in interconnection costs, 21% compared to 2007. Looks then very humble compared to the 80%, of course. That alone costed us, Deutsche Telekom, over the past 2 years, 100 million in revenue. Every reduction of termination rates of interconnect we see as a negative signal. All of you know we have to invest in that market, but I think it's important we see positive developments as well. Nelly Kroes has clearly said it's time now to change the rules of the game. We have been promised a more stable framework until 2020 with stable ULL prices. Very good signals on no more ex-ante cost regulation for the new network infrastructure, including FTTC, for example. And I think those very important signals for us and for the industry are the basis for what we are promising you today. As said, it's encouraging. René said yesterday as well. Now we are waiting for the legislation and the regulation to be changed. I think Brussels has understood. Berlin, meanwhile, has understood. We are now waiting for the Bundesnetzagentur here in Bonn the regulator to support us as well. And I can say I hear a lot of positive signals. The industry has understood it. The politics have understood it. This is the way forward for Germany and for Europe. Based on these trends and some of the developments, and of course not a full picture, I want to talk with you about stabilizing our revenues in 2014 and promise you further market leadership. I've put my story in the following framework, which is our Deutsche Telekom strategy. For Transform, I will talk about integrated networks, the integrated network strategy. There's been a lot of speculation about that. The key elements were discussed yesterday, but I'll give you more detail. I'll tell you how we use that to become even more leading in mobile and fixed, based on those networks, but also on the other elements of our marketing mix. And finally, on Innovate, I'll tell you what are the innovations we are looking at. Since the networks is, and what we are doing there is on everybody's minds, and it is really the basis for what we are doing in marketing as well, let me start with the integrated network strategy. We believe, and we see that already, that network quality becomes more and more crucial. Consumers notice it every day. I told you the 3 key use cases. We see the parallel sessions, the usage on multiple screens. You saw yesterday the TV program, which was transferred to the tablet, and from the tablet to the TV again. It could be on the handset as well. That parallel uses, together with the use cases, will increase the demand for more speed, not only in urban areas, but also in rural areas, where we are coping with fixed mobile substitution, for example. There will be an increased demand for coverage, not only on mobile, which was always the focus so far, but also on fixed. It's very high on the political agenda to also offer the coverage on fixed line solutions and on capacity, of course. I've shown you the massive explosion in data usage. Some predict even more due to mobile data, but especially to mobile TV and video, of course. I dare to say we are the only national player in Germany that can make really a trustful promise on bringing that quality in a network with speed, coverage, and with capacity. We will build that superior network, and I tell you, we are not starting from zero. All the elements for the superior network are there already. The 4 building blocks. We will start with a maximum LTE rollout. That on itself, and I want to stress that as well, is already giving us a major competitive edge in mobile. So even if we wouldn't do anything on the fixed line, the invest in LTE is absolute justified. It allows us to reach high peak speeds in the urban areas, in the rural areas, and we will massively increase the availability of LTE in Germany. Second step will be the massive rollout of fiber. We promised you 65% where we will where we bring fiber to the street cabinet. We called it so far VDSL, and that's the last time today I will use that word. As of now, it's called fiber or FTTC. And if we get the support, because that will be necessary in a sense from co-funding, subsidies, we hope to be able to extend the coverage even to 80 or over 80%. Vectoring, everybody has been waiting for vectoring, will help us to double the bandwidth up to 100 megabit in download and up to 40 megabit in upload. I will go into more depth on that. And then the fourth part of the puzzle, bringing everything together, is that I would say revolutionary combination of fixed line and mobile. We combine the capacity of fixed with the speed of mobile. That will bring better network performance, but there's two other elements I want to mention as well, which I think are important in this solution. First, it brings a redundant access to internet to the house. I just told you the Germans are very much no risk, want to have the certainty if you have a fixed line solution, if you have a mobile solution, if one of the two might not work occasionally, you always have a redundant infrastructure. Secondly, it will help us to massively improve our sales abilities. It's really a plug-and-play solution where we still need to do some installation maybe on the fixed line. People can already, who buy the product, use it at the same day via the mobile solution, and that same mobile solution will help us if there are problems on the router to install, approach the router or the equipment from the user via the mobile, or if there's a problem on the mobile via the fixed line solution. So these four building blocks, I will explain in a little bit more detail, are key drivers for what will build the best network in Germany. As said, we go from currently 38% POP coverage on LTE to 65%. It will be the fastest rollout in history. For 2013, we will basically doubling the already enormous capacity we have for 2012. We will offer peak performance in LTE. You see here the 150 megabit on LTE 1800. That's based on a new type of handsets, the so-called Category 4 handsets with 4 antennas. We estimate them to be available in the market as of 2013, and they will give an even greater breakthrough in the quality of speed. What's important as well is that with this with LTE 1800 on 20 megahertz, we are able to also very efficiently roll out this network. And as the last part of this graph shows you, we will have 70% less capex per megabit. If we go to fiber, on FTTC, we currently have a footprint of around 12 million households in Germany. We will increase, first of all, the footprint in an FTTC to another 12 million, which will bring coverage around 65%. With vectoring, we will increase the performance, as said, to 100 megabit for the download and 40 megabit for upload. And if we find the co-funding, we will increase our coverage to even 80%. A word too on this combination of fiber and vectoring. I think it has another attractive element. It allows us to roll out very fast. In basically 3 years, we will increase the coverage to 65%, and depending on how fast the rest of the money come, we will need 5 to 6 years in total as of today to roll out to 80%. Has to do a little bit too with the capacity available for construction. It's not unlimited, of course, and if we would build too fast, prices would go up massively. What is good as well in this solution is that we, and I hope you will appreciate that, can work with relatively low CapEx. CapEx for FTTC and for FTTC, we estimate at the moment around 250 to 350 euro per household. That is roughly 70% more efficient than what we are paying at the moment for FTTH, where we pay around 1,000 euro per household. And then please keep in mind that the 1,000 euro we are paying at the moment is in the most efficient areas which we pick out. Maybe this is the right point in time also to make a remark about FTTH. We once said we will build out up to 10% of the country by the end of 2014 with FTTH. We slow down that rollout, but we don't stop the rollout. We still find areas in Germany where we can, on a profitable basis, build out FTTH. And we will do so, first of all, because it's profitable. Second, because we don't want to lose the experience we are collecting now in building the product and in selling the product, because that's different from what we have been doing. And in the end of the day, we think FTTH is the target solution. We are building the combination of FTTC with factoring as an intermediate step towards FTTH. And the good news there is the current program is a non-regret move. We estimate that more than 50% of what we are investing in FTTC plus factoring we can use later on when we go for the next step and upgrade that network to FTTH. So it's not sunk cost. But very important here as well, can't repeat it enough, we have to get the regulatory framework, we have to get the permission for factoring, on which I'm optimistic that we will get it, but it shouldn't take too long. As René said yesterday very clearly, if we don't get the support of the regulation, it will be impossible to execute this plan. The fourth step is the so-called hybrid solution. It will bring the best of the fixed line network and the best of the mobile network together for the customer at home, with all the advantages I mentioned you already. Fixed very strongly to bring the capacity. For example, if you're downloading a video, you can do it overnight and you don't need the peaks you can reach in speed in mobile. But if you just want to have some emails or some quick info from the internet, the system will intelligently try to use as much of the capacity there is in mobile at that moment of time. Bringing those speeds together is not just using mobile and fixed, it's really adding up the speed. And that's what we try to explain on the right side of the graph. You see that we have made a distinction between cable footprint and a copper-only footprint. If we take the example, for example, in copper-only, which I like, you see that in ADSL we currently offer a maximum of, let's say, 16 megabit in the top. Mobile only with LTE 800 would offer up to 50 megabit, which is the peak performance you can get there. And our solution, the hybrid, stands out with a speed of over 100 megabit, based on 100 megabit on LTE 800 and on the DSL 16. What you see, and I think that's good to keep in mind, that both on download, but especially on upload, we have a very strong competitive edge. That's projected for 2015. I think it has the potential to help us and support us in a competitive environment even longer. Why? Let me show you here. I think on the one hand, we deliver the best fixed network, we deliver the best mobile network, and what we're trying to show you here is how this relatively overseeable and fast investment we're doing in infrastructure will prolongate the life cycle of our copper network for another 10 years. What we do here, we show you the number of customer use cases which we can cover with one specific technology. If you be with me in the year 2022 or 23, you see that with ADSL we would only be able to deliver, let's say, 10% of the typical use cases. A typical use case being a family with 2 children who uses internet, who uses IPTV, and maybe by then some other intelligent network solutions. If we build, and we will build our infrastructure with FTTC, with vectoring, and with hybrid, we will basically be able to cover 100% of the use cases. You see, we are optimistic. We are able with this program to bridge a very long period of 10 years, but then the world will look different. There will be more demand for FTTH. Maybe we'll have new technologies to build that network more efficiently. And I think the solution we are bringing here answers basically all the customer demand, gives us an efficient way to work towards FTTH in the end, with a very sensible step of bringing together what only Deutsche Telekom can, the best in mobile and the best in fixed. Good, I showed you our integrated network strategy as the building block. Let's now see how we exploit it. Because, as said, it doesn't stop when the best network is out there. We have to sell it as well, and we have to monetize it. After the superior network comes, of course, innovative products and tariffs, best-in-class sales and service, and benefiting from one company approach where we invested so much time and money in to do massive cross and upselling. Let's look at the products. What are our key differentiators? We will end up with high-speed browsing, be it at home, be it out of the house, where we offer the same speeds, be it on mobile, be it on fixed. I think that is something nobody else will be able to offer in the market. Secondly, we continue to invest a lot of time and effort in our TV offer. TV on all screens is what we really believe in. You've seen it yesterday. We combine it with mobile solutions like a program manager, which allows you to program your programs on the way. We have the remote control. You saw yesterday it didn't work, but I'm sure it works today. And we'll bring you Entertain to Go on all screens. On cloud, I think we are the perfect partner for customers in Germany. I'm not talking only private, but I'm talking SMB as well. I'm talking bigger customers for cloud solutions. First of all, there's the demand. Secondly, we as Deutsche Telekom are the most trusted brand with regards to data storage in the German market. Recent studies showed that 49% of the customers would trust us to put their data in the cloud. And that compares to below 30%, for example, for Amazon, who is, if you ask me, the first party you would think of bringing your data to. And even institutes like Deutsche Bank are far away from the 49% trust we got from the customer. It's a massive growing market, especially for SMB, of course, for the coming years. You heard the number yesterday, and if we can only get a tiny piece of that, we are well positioned there with the products. It's absolutely something. It's a use case that will drive the usage of our networks and will increase the demand for speed. What else do we offer? We offer the largest own distribution network in Germany. We have over 750 own telecom shops and more than 1,000 distribution partners. They are visited by 40 million customers per year, and 80% of the German population lives within 20 minutes away from those stores. Every research, time and time again, be it our own, be it independent, confirms that our shops are standard as it comes to mobile or fixed line telecommunications retail business. Second part, and I gave you some examples already, is on customer service. We managed successfully over the year 180 million customer contacts. We have significantly improved. You will think 180 million is a lot of cost. It is. We are reducing even further. We have a big program out there called K1, Customer First, and that program tries or brings into perspective very much the end-to-end solutions in the processes we have. That leads to automation, it leads to better customer satisfaction, but I have to be honest as well, the 180 million contacts with over 10,000 agents is a unique sales opportunity for me as well. And over the years, our customer service has developed into one of our most important sales channels in Germany. You can imagine if I have a customer on the phone who only has a mobile contract, excellent opportunity to sell broadband or TV if he or she only has a fixed line contract, I can sell mobile. So in the end of the day, I wouldn't want to lose that. But as John said yesterday, we are bringing much more, like in the US, responsibility to the agents to bring the solutions for customers faster, with less trouble for them, in the end, to drive customer satisfaction. Another important customer contact is also the technical service we have. I have more than 10,000 experts out there. It's the biggest field sales force in Europe. I have 10,000 doing the central work and to make sure that people get their fixed line connection. Those people are out there, but they are not only a cost factor anymore. We have developed over the years more and more services like IT support, where if you have a problem, someone calls you and via the fixed line can solve the problems you have on your computer, but also IT forward. That's the guy who comes in your home and does the installment of your computer or your TV solutions. And that is meanwhile a business of more than 200 million euro with aggressive planning to reach 500 million in the next 3 years. We are turning that organization not only into a traditional service organization, but also into one of our bigger sales channels. And if you take this, I think it has much to do with the customer contact point. It's one of the big assets we have. We have invested in both in distribution, but in customer service and in technical service over the years. Not only by better processes, but also much more customer focus. And that customer centricity has become the DNA of Deutsche Telekom. It sounds very easy. It sounds a little bit, what is it worth? I think if you really want to take such a massive organization and turn it from a very technical-oriented organization to a customer-focused organization, you need years. We have been investing for years, and we have a massive advantage now over our competition. So strongly that even a lot of our competitors are talking to us or have already the first contracts for us to give service to their customers. And I'm talking competitors who take part of our service portfolio. Good, talking about portfolio, what is our mobile portfolio? A shift to product. The Telecom brand is typically our premium product, as you will imagine, and as you will expect from us as well. It has unmatchable LTE performance. It's the only brand on which we offer the 100 megabit speed at the moment. We can do that based on the excellent spectrum, the 1800 spectrum, which we acquired 2 years ago. We do that typically with world-class devices. They come with really extras like Spotify, but also not to underestimate our hotspot network. We offer more than 11,000 hotspots in Germany and are on the way to increase that number to over 18,000 in 3 years. We have very strong partnerships with Deutsche Bahn, with Lufthansa, with McDonald's, and we see an increasing interest in Wi-Fi over the past year. Basically a doubling of the number of users and a doubling of the data usage there as well. We think it will massively help us to really, at those points where there could be congestion in the network, to secure that customers have access to the network and customers will use it for the high number of downloads they will have, like video. I think if you take your own usage of a hotspot, you have to get used to it, but once you know it, you can't do without it anymore. If we look at the gray part, those are the fast followers. That is the products we offer to our service provider, to discount brands in the German market. Specifically the ethno segment, where we had more or less stepped out or didn't have too much interest. Strong growth, positioned for smart shoppers and for discount with a good quality at a reasonable price. Of course, we don't hold the customer relationship there. Where we do hold is with Kongstar. Kongstar for the smart followers, typically online business for the younger customers, with a very good offer both on the flat fees, but also meanwhile on data. And we see a strong double-digit growth over the years and predict that for the coming years as well. On mobile, our key focus will also be for the future to look at value. We will not go for maximum revenue without any profit in the end of the day. We will not go for massive customer numbers. Why? Because we see that the approach we have taken for value has helped us in the past. If we look at our acquisition, the new customers we acquire, of course, at the moment, very strong focus again on iPhone 5. We are the only ones who can bring that product really with LTE. We focus on the higher end tariff plans as well. You can see that in 1 year time, we were able to massively increase the percentage of double play customers with the new customers, and it has led to a €4 increase in ARPU. In the base, retention, partly upselling, but also defending against the very aggressive offers in the market. It's a different game, of course. There we are also successful in selling double play. You've seen we've gone from 41 to 55% in the base. Only, I would say, stabilizing the ARPU. My 60 cents ARPU decrease, strongly driven, of course, also by 24 months contract, this whole value picture. But if you see what's happening in the market, I'm proud that we have followed this value approach and that we will follow this value approach also for the future. On LTE, we think LTE is really becoming a differentiator in the market. More than 10% of the data volume is already on the LTE network. We expect 7 million customers with an LTE-enabled device in 2015 in our portfolio. In our smartphone portfolio, I should be careful, otherwise your numbers won't match. And at the same time, with the increase in double play I've just shown you over the past 2 years, in which we expect to even catapult into 2050 to almost 50% increase in double play customers, we predict and we calculate a service revenue increase of between 2 and 3%, reaching 7 billion in 2015. The 2 to 3 is in some research on the high end. Our own research comes to 2 to 3%, and it's also the Mason research, for example, that predicts the Mason research predicts a basically stable market with our 2 to 3% growth in the market. It would mean that we outperform the market. That's what you see in this picture. On fixed, and there's always a lot of focus traditionally in these discussions on mobile. I think because our competitors are mostly mobile players, but fixed is still 2/3 of the business. I'm therefore so happy that we discussed a lot about the integrated network strategy as well for the coming years. Fixed 2/3 of the business. This chart shows you the key elements to compete, especially against cable. First block, I won't repeat. It's being absolutely sure that we have the best network out there. In the cable footprint, I've shown you that we will be competitive. We will be at par or even better on download. We'll be significantly better on upload capacity and speed versus the cable operators. And then the product kicks in. As said already, we have a superior TV product. I'm really proud. Also, if we talk about IPTV, we win every prize, every contest there's out in the market. Customers clearly appreciate that product. And with the increase in coverage behind Entertain over SAT, I see a bright future. We are reaching the 2 million this year. I want to repeat that once more. We were by 100,000 3 years ago, so high growth. I think there's much more to come. There's much more to come in traditional TV as well. Traditional TV as a first step into the housing association. We finished a contract with Deutsche Telekom last year with over 170,000 households in Germany, the leading housing association in Germany. We made a contract with Antec in Hanover, be it on a level 3, but also very important with more than 40,000 units. And we are right now discussing other very interesting inroads into the housing association. The housing association in Germany holds kind of a monopoly with a coax infrastructure, and thereby cable has that monopoly. I think it's very important we tap into that potential, profit potential of the cable guys there, estimated to be around $1 billion in Germany at the moment, with extremely high margins on the TV product. And I think if we step into the TV market, which we're basically doing now, and which will be a final start in 2013, in Feb 2013, the first 42,000 households of Annington will be connected to the market, and everybody's waiting for that moment. TV prices will erode even more on the traditional TV product. And that will also mean that there's less money for cable to cross-subsidize the broadband product, giving us a chance to stabilize prices in broadband or even use the upside potential, which I will show you in a minute. Important also is the wholesale strategy. I know it comes with some critical questions from your side as well. We foresee in wholesale to offer competitive wholesale products based on fiber, so on FTTC and on vectoring and on the contingent model. There was a request to explain a little bit more about the contingent model, and I'm happily doing that, of course. We believe strongly in that model. Why? It is a model that helps us to maximize the revenues from our existing and our future infrastructure. First of all, if we would lose the unbundlers on that network, they would either go to cable or they would totally disappear out of the market. Of course, we could win some of those customers back, but we think it's a better option to keep wholesale players in the market, together develop that market from a marketing point of view, but also from an investment point of view. And the model we have with the upfront investment of €160 per line is a model with long-term perspective contracts of up to 10 years, where I think really that idea of risk sharing, together investing in modern infrastructure comes to life. The carrier signs that contract with a commitment for volume, for the number of FTTC access lines they will buy with us. And with that commitment up front, they get a lower price. They get a price discount depending on the number of lines they will finally buy with us. Whoops, some people say, but you're giving away money there. The price is out in the market, €13.38. That is clearly below the €20 we are talking about now for a wholesale solution on FTTC. Nevertheless, on the right, I think you see our perspective on what we think will happen. We're talking now about an average wholesale ARPU of around €11, €10 on the traditional ULL, but as you know, we also have about 15% of our customers on IPBSA. That brings up the price on average around those €11. In the contingent model, people don't only pay the €13.38, they also pay the €160 upfront. They pay a €50 for the first time connection of the customer, and there is there is a price if customers go over a specific amount of volume, and that altogether brings the average ARPU we expect behind the contingent model around €20, which is 90% more than we currently have in wholesale. We also think that the wholesale, that this model, this contingent model, is a very credible signal to the regulators. It shows that we're not out there to build a monopoly, that we believe in what we have said for a few years now. Network rollout in Germany can only work if more partners participate in this. We don't have 100% market share. We can't do 100% of the investments. We need partners. And talking about partners, I'm happy to announce today that we didn't only sign a contract with Net Cologne, one of the smaller regional players, but an important one for us, but also with Telefonica. The ink has just dried since yesterday. Telefonica has also stepped into this contingent model. And I think if one of those big players signs such a contract, it's a clear signal of the belief in this model for the German market. Good. How does it further work in the fixed line business? In retail, we think we will be able to compensate line losses. We will prevent future price declines by continuing upselling of fiber and entertain. Fiber is needed for the higher speed. For example, we now have an up price of €5 per month to go from copper to fiber. I told you the use cases are increasing, but people need more speed as well. We see the same on double play to entertain, upsell from customers. High definition kicks in, 3D TV kicks in, and if we compare entertain ARPU with double play, we see an ARPU lift of 20% from €32 to €38. That combination of more fiber, more, let's say, of the value chain we are able to monetize for Deutsche Telekom will lead to a growth of 2% in connected home. So connected home basically being all our fixed line business without the single line, the traditional telephone line. Good. Why is that so important that we do more than our network? We do more than partly our traditional business. We also need growth business. We have to be realistic as well. We see decline in traditional voice business. We see a decline in SMS and mobile, for example, and we will see some more fixed line losses over the future. Thereby, our ambition is to grow as well in what we have called growth business. By 1.7 billion over the next 3 years. You see that there's also an increase in our more traditional growth business, so in connected home, which I've just explained to you, double play and triple play, and in mobile data, in which you see an increase from 2 to 3 billion on an annual basis. But with the new really growth business, we expect a growth of 250% over the next 3 years. A combination of products we have developed ourselves, like the email, for example, like Deutschlandland, but also with partnerships like Spotify and Join. And that combination, we see an increase of 500 million over the next years, which will help us to come to where then all financially comes to a stabilization of revenue in 2014. You see here that we expect our growing business to increase to 40% of total revenue in 2015. We are currently at 32%. That is behind the 2% growth in connected home. That's behind the 50% increase in mobile data and the 250% in our growth business. So growth will also come from businesses in which we are strong in yet already, next to new products like the email, for example, or energy, which was mentioned by René as well yesterday. Now, let me see, how are we going to get along with the invest? I told you yesterday we will invest until 2020 in INS, Integrated Network Strategy, an amount of €6 billion CapEx. For that, we build another 12 million households on FTTC to reach the 65% coverage until 2016, so it will go relatively fast. And we will need about 500 million to upgrade our current FTTC network to vectoring. We will fund that partly by reduction of basic capex by 4.4 billion. That is mainly IT and anti-legacy capex. However, we will also invest into mobile. We will invest into LTE. And the investment for the next, for until 2016, at the moment we have estimated at 600 million euro on mobile alone. At the same time, I told you as well, we will continue to invest, be it on a relatively low level, in FTTH. As a result, we will have additional capex over the period till 2013 till 2015 of 1.6 billion compared to the 2012 level. If we look more short term for the next 3 years, the perspective of this day, we will invest 2.4 billion CapEx in INS, in FTTC, and in vectoring. We will also here compensate part of that invest by reducing basic CapEx, basically by 1.3 million with the same billion, with the same drivers as I've shown you on the previous page. And that means that we will, for the next 3 years, invest a delta of 1.1 billion euro compared again to the 2012 level. Further, we will fund this program by savings in indirect cost, which you see on the right side of this graph. We will reduce indirect cost by about 1 to 2% each year over the period of 2013-2015. It might sound like an easy job if you look at our track record over 2009 and 2012. Please keep in mind we have a massive operation out there. We are building INS integrated network strategy. We are also in the all IP transformation Claudia Nemert told you about. Those key programs, driver for cost, of course, in the next years will be, let's say, will deploy more than 50% of our own employees, which will give us a bridge to work on more efficient employee programs for the years to come. It doesn't mean that we totally step away from personal reductions over the next years. The focus will be on the central organization. We'll cut on overhead structures in all non-operative units. And that effect will contribute to a reduction in indirect cost. At the same time, we will invest in direct cost, or we have to partly. Part of the direct costs are driven by interconnect. That will increase. There's more usage. They will be strongly customer driven. But we also invest ourselves very strongly to get back on a structural base and to secure the leadership in the mobile business. Compared to 2012, we will invest another 150 million in 2013, just to give you a feel of where we are going. And that compares again of a delta of 300 million to 2010. And we will further invest in growth initiatives. Balancing out what we save with what we invest, we expect a 500 million netto OPEX reduction over that 3-year period. Good. Despite those high investments in our broadband networks and in the market, our ROCE will be up by 1.2% point, all behind the stabilization of revenues and strict cost discipline, reduction in legacy CapEx, which I've told you. We will be very strict on where we invest and where not. We will have high hurdle rates before we give investments free. We will have changes in our restructuring policies, thereby lowering the special factors, which you see on the right part of this chart. And we will be very efficient in managing our asset base, which will lead to lower depreciation. Summarizing the ambitions of the German team for 2015, we will secure, where we don't have it yet, broadband market leadership in mobile and in fixed. We will stabilize our revenues in 2014, and these are the most important KPIs we want to share with you. Clear number one in mobile, in service revenue with a revenue share of about 35% in 2015. Clear number one with a broadband market share of 43%. I'm still talking customers because the other data are not available. And the strongest player grow in the TV market in Germany. On quality, a further improvement of customer satisfaction. Behind the initiatives I've shown you, I think that all fits into our company strategy of being the customer's first choice for connected home and work. And finally, on finances, stable revenues as of 2014 due to market leadership in fixed and in mobile. Successful upsell of TV products, leading to an increase in connected home by 2%, 2015 over 2012. And I'm happy to say that all comes with maintaining a high EBITDA margin of around 40% over the years to follow. To summarize, we will build the best network, with LTE, with fiber, with factoring, and on top, the hybrid access. We have very strong differentiators in everything we do in the marketing mix, be it in the broadband coverage we offer, be it in the products, be it in our distribution network, be it in the service and in the sales opportunities we have. We will maximize everything that one company brings us, has brought us already. We will bring revenue stabilization in 2014, and we will do so with a solid financial performance of around 40% EBITDA margin. I know you think they promise a lot. I tell you, we do. We think big. This is a big step for the German organization. It's a big step for Deutsche Telekom. I can tell you the German team is 100% committed. We have been working very hard to get where we are now. We continue to work hard. There's a lot of energy. I think I have the right team to do it. It's a very disciplined team, not only on delivering, but doing that in a very efficient way and also delivering on the finances. So it's not just a marketing vision, but it's a very well-balanced marketing, technical, and financial play. You will meet the team this afternoon, where we have time to go into some more details, and you have time to prepare now for the questions for that team. I'm happy they're fully committed. We will deliver on this ambitious planning, and I want to thank you for your attention.